takes your calls, and we end with Tom's look at today's market. Because Scott's not here today, and Tom is on his way, so we have our lovely Jack sitting in so that I'm not so lonely.
Don't want you to be lonely.
That's right, thank you. So our first letter is from David, who asks, what's the deal with Lossdog? Tom and Scott, you taught me how to optimize my probability of profit as an active investor. So you have my attention. But Lossdog is a mystery to me. So what's the deal? Says David.
Good
Jeff?
question, David. We've been getting that question quite a bit.
Yeah.
By the way, I'm just sitting in for Tom for a little bit, answering some Lossdog questions. They let me use the big dog chair for a little bit, and I'll go back to the dog pound later, where I interact with many of you on a regular basis. But we've been getting a lot of Lossdog questions, obviously, as we're getting closer to launch. We're going to launch on April 1st. What that means is we're going to let the first subscribers into the platform. It's going to be a gated entry. We're not going to open the door to everybody out of the gate, but there's been a lot of interest in Lossdog. In fact, Tom's was on a media tour this past week. He was at the Wall Street Journal, CNBC, New York Stock Exchange.
Bloomberg.
You'll see him in other number of places, right?
Yeah,
Did a podcast
he was everywhere.
with Anthony Pompliano and Guy Adami. So you'll be seeing Tom telling the Lossdog story quite a bit as we get closer to launch. But let's answer the question and help me with this, all, because you know it as well as I do. But Lossdog started with the simple premise that career professionals are underpaid systemically over time, as much as $2 to $4 million over the course of their career, over a 30-year career. And in fact, recently we published a white paper, a research brief on that very topic. And you can find that on our LinkedIn page, or at the Lossdog LinkedIn page. You can find that on Twitter, and it'll be on the website as well. But it gets into the reasons that quantify this pay gap, and we speak to this pay gap and kind of quantify the underlying framework that resulted in this systemic underpayment. And what Lossdog seeks to do is to give career professionals the tools and the data that they need to be able to negotiate and realize their optimum salary. So the process is simple. There's two components to Lossdog. I'm speaking on the career side. In fact, when you first come into the platform, you'll see career and you'll see portfolio, and those are the two elements. So Lossdog has value to anybody who's a working professional or anybody who has an investment portfolio. So it casts a wider net than simply being an active trading platform. But the way it works is you upload your resume, or maybe it's your LinkedIn profile that you download from LinkedIn and upload it into the platform. And within a minute, it's going to look at your professional history, your salary history, your education, your internships, your special projects, your languages, your certifications, your skills, and it'll be an assessment of your actual value in the role that you're in. So within a minute of uploading your resume to Lossdog, we're going to give you your Lossdog score, which will be your actual number, what you should be realizing in the marketplace. You'll find that invariably that's going to be higher, perhaps, than your actual salary much of the time. And then Lossdog on a regular basis is going to speak to you about upskilling and ways to reconcile that difference between what you're currently being paid and what you should be paid. You'll also have the ability to enter another city or another job. So if you want to say, oh, okay, that's my value in my current role, but what if I was an investment manager in Sacramento, or if I was a loan originator in Boston? What would be my value? And the idea, again, is to give you the tools and the data you need to negotiate a little bit more aggressively and make important career decisions. So Lossdog is focused on the two ways you make money, the two ways that most Americans make money. It's either by their job, so the time that they spend working, or by their investment portfolio. And we seek to optimize both of those. And the investment side works pretty similar to how the career side works. You upload your portfolio. We use Plaid as an interface. You can manually upload it, but it's a simple process. You can bring in your portfolio from Schwab, Robinhood, Tasty, wherever. And then Tom, who's been working on this for quite a while with Scott and the rest of the data team, has put together a series of protocols that help you optimize your portfolio for basis. So not only will it look at your current portfolio, how it's allocated, give you an idea how much you might be leaving on the table by not taking certain steps, but it'll tell you things you can do to increase your portfolio returns going forward. So it treats those two sides of the equation the same way. You provide information, we provide you actionable insights as to how you can increase both your salary and your portfolio returns over time. What did I leave out?
Nothing. I think that was very thorough.
Okay.
Right, people? That's a good one.
So that's the deal. And it is a mystery a little bit. In fact, we have a video that we'll show
Yes.
In a couple minutes that might give you a little bit more background as to what's ahead for Lossdog. But going forward, Sol and Tom and Scott will be sharing lots of examples, case studies where people will be uploading resumes and you'll see the score realized in real time. So if the question is, what's in it for me if you're a working professional or if you're a retiree with a portfolio, that's the Lossdog marketplace. If you're a junior or senior in college, it's also very attractive to you because it will help you make career decisions going forward.
That's right.
Right.
And it'll help you invest, too.
Help you invest, that's right.
Even from scratch. We have a question from the Dog Pound. Will the portfolio aspect of Lossdog be similar to Sylvia? Pompliano developed Sylvia to track assets.
I'm not familiar with Sylvia.
I'm not either.
It's funny you mentioned Pompliano. Like I said, David or
Yeah.
Tom was just on his podcast this last week. It hasn't aired yet, so you can look for that coming out soon. We'll share that on the Lossdog Twitter site and on LinkedIn as well. And if you haven't followed us on Twitter, follow Lossdog. We are Lossdog. And our LinkedIn channel is Lossdog, is
Yep,
the name of it,
yep.
right? And that's where we're posting white papers, research papers, etc. But sorry, don't know Sylvia. So
Okay, well, we'll move on to the next one. Next question is, I joined the launch list for Lossdog. Now what? Says our friend Cecilia.
yeah, we get lots of
Yes.
emails on this frequently. Sol and I and Courtney spend a lot of time answering these.
Fielding those questions.
Yeah, these questions, because we're using an outside platform that is managing our launch list. And the way it works right now, you go to lossdog.com, you enter your name on the launch list. It's pretty simple. We ask you your name and email and what state you're in. And this is excluding, you have to be a U.S. resident to participate in this stage of the launch.
Right.
But to be very clear, we're making accommodations for non-U.S. residents as well. But to get back to how it works, you enter your name on the launch list, and within about a couple seconds, you'll find out what your position is on the list. And that matters because we're giving rewards out to the first 50,000 subscribers to Lossdog. They're not going to pay a platform fee. So for the first year, we've waived the $100 annual fee. We've made it a low friction, kind of seamless sign up, no credit card, nothing, just name, age, state, enter, and then you get your ranking number. You know, it might say at this point that you're number 10,000. And what that number does for you, you get two things, what your rank is and a referral code. And the referral code is something that you can share with friends and family, and you should, because again, if they're a working professional or they have an investment portfolio, there's value in Lossdog. Not to mention the first 50,000 subscribers are going to be sharing 1 million in crypto. We're going to give every one of those first 50,000 subscribers a piece of that crypto. It will be equally divided among Stellar, Solana, Ethereum, and Bitcoin. And you'll have an actual portfolio that you can sign into every day on Lossdog and see what the current balance of your crypto is.
Which you'll be getting for free.
That you'll be getting for free, right? And even if you don't want the crypto, you can gift the crypto to someone else, or you can gift the Lossdog subscription, maybe to your son or daughter who might be let's say you're retired but your son or daughter are working, and they can use the Lossdog subscription for career optimization. You can keep the crypto, or vice versa.
To those of you who are just joining, sorry.
Yeah.
This is our friend Jeff.
Hey.
He's the one that's normally in the dog pound, keeping all of you guys in check. And He's fielding some of the major questions that we get from Lossdog, from our Lossdog people, asking about everything that's going to happen with Lossdog. So here we are. Tom will be in to take your calls and other questions in just a few minutes.
Yeah, stick around. Tom's going to be back.
Yeah, so stick around.
Right, not going anywhere. But we've had lots of Lossdog questions, so it's a good opportunity to address some of those.
Yes.
So again, if you haven't shared your referral link or you don't know it, you can always email support@lossdog.com. We'll get your referral link to you and your current ranking, although you can go check that yourself as well. But sharing the link helps for us. You know, one of the questions we get, and I don't know if this is on your question list, but
Let's see.
why are you giving away the $1 million?
Oh.
And why are you giving Lossdog away for free?
Right.
And it's a great question, and I think we should address that. Lossdog is built, it's an AI-powered platform. So it gets smarter with more input and more use, like all of the LLMs out there. The more you use it, the better your accuracy is. So for a number of reasons. First, we want to scale up. We want to be able to impact as many people as possible. So nothing like a free crypto incentive and waiving a subscription fee. Again, no friction, no credit card, simple sign up, no upsell. You're not going to get an email in a month saying, give us your credit card, we want to sell you something. It doesn't work that way. What we want to do is have Lossdog improve its accuracy and its value to you and give you a whole year to look at it and decide at the end of the year if you want to continue to renew the subscription at $100 a year. And that'll be your choice down the road. But in the meantime, we're kind of creating a moat around our business by having more subscribers and kind of fend off the competition a little bit. And it also allows our large language models to get smarter and smarter based on more interaction and more input.
That's right. Next up, I tried to join the Lossdog launch list, but I was told I could not. What do you have against Canadians, Jeff?
Yeah, we're constantly deciding what we have against Canadians, but
we have nothing against
Canadians. Nothing against Canadians.
We love Canadians.
And in fact, we almost feel bad. We won the Paralympics and beat.
I know.
It's like a clean sweep against Canadians in sled hockey. In fact, the last 5 years they beat them. Yeah, but the crypto offer is only open to U.S. residents
because of regulations. We would love to give it to everybody, but we can't.
That's right. But we are accommodating, but we are going to extend the free 1 year subscription to non-U.S. residents.
That's right.
And if you go to the Lossdog.com sign-up page for the launch list, you'll see something that says not a U.S. resident, and you click on that, and we have a separate list, and we'll accommodate you then.
All right.
And we also have a little video, I think, that we'll
Yes, we do. We should play it now.
Yeah, let's play it. Watch this for a little bit. Tom will be back at the end of this video to take your questions as he does every day. Thanks for having the opportunity to talk about Lossdog. But watch this video and you'll get a better feel for it.
Thanks, Jeff.
Thank you much.
I'm Tom Sasso, founder of Thinkorswim and Tasty Trade, and now CEO of Lossdog.
Wow.
I've always believed in goodwill marketing as the best way to introduce new software. That's why I'm giving away $1 million in cryptocurrency and 50,000 free subscriptions to celebrate Lossdog's debut. Here's why cryptocurrency. Digital assets have been one of the best performing asset classes since 2009, and yet 75% of adult Americans have never owned crypto. So I'm putting a crypto starter position into 50,000 accounts. Your choice, Bitcoin, Ethereum, Stellar, or Solana. But this launch isn't just about crypto, it's about something much bigger. How to build wealth by understanding the math behind wealth creation. I've spent my entire career democratizing access to financial markets. Now I'm going to do the same thing for career compensation and portfolio optimization. Lossdog is an AI-powered platform that tells you your precise professional market worth, as well as your potential net worth. We've already trained Lossdog's AI with millions of resumes and hundreds of millions of data points. But here's what makes Lossdog compelling. Every person who uploads their resume or portfolio makes our platform smarter. The AI gets better, the accuracy improves, and that creates a moat around our service that others simply cannot replicate. That's why we're making this offer, and that's why you need to move quickly. The first 50,000 people who join get free first-year Lossdog subscription plus the cryptocurrency. The earlier you join, the more crypto you earn. No credit card required, no obligation, but when you sign up, you get a unique referral link. Share it, and every person who joins through your link pushes you forward in the line, meaning you earn even more crypto. Some people will move up hundreds or even thousands of positions by just sharing. But there are only 50,000 spots. When they're gone, they're gone. The people up at the front of the line get the biggest rewards. So if you're a U.S. resident over the age of 18, join the waitlist at Lossdog.com today, and you'll see exactly how much crypto you can earn in each position and all of the details of the promotion. It takes 30 seconds, 5 questions, no gimmicks, no credit cards. Visit Lossdog.com right now. Get your position, get your referral link, start earning, and get more of what you deserve.
And here he is,
I got a hat on today because I
Mr.
haven't.
Sosnoff.
Hair's ruined.
Oh, he's so vain.
No, it's not a question of
All
being.
right.
I slept basically in the airport last night.
Yeah.
Yeah,
I know.
It was a long night.
There were thousands of flights canceled, so yeah.
I got my first cancellation yesterday at 11 o'clock in the morning, and I took a 2-hour Uber to Boston, and then I sat in the airport in Boston from 1:30 till 10 o'clock at night.
You did?
Yeah.
Why did you wait that long?
Because they kept saying the plane was leaving.
No, my God, these people, but anyway. O'Hare was grounded.
I know.
Anyhow.
I tried. Anyway, let's do it.
Let's
Thank
do
you,
it.
Jeff, for sitting in. Let's have some fun.
Yes, so call us. Remember, call us now that Tom's here.
Yeah, don't be shy.
989
I
Lossdog.
rushed my ass all the way back here for you guys as quickly
to
as I
take
could.
your calls. So
To take your
please.
calls. Yes.
Okay. Do you envision any of the stablecoins operating similarly to credit cards for daily transactions?
Of course.
Pix in Brazil seems to be a huge success,
Yeah.
says our friend David.
Yeah, David, I do. In fact, that's why we're launching a stablecoin here at Lossdog. And I do envision stablecoins operating very similar to credit cards for daily transactions. This is digitizing, creating digital capital does not mean it has to have principal risk like digital assets, like Bitcoin and stuff like that. So, no, of course, not only do we envision it, it's happening right now, it's happening in other places around the world, and it's going to happen here in the US. It's just, we're always a little slower to embrace technology here. You know, we're
Yeah.
what do you call purists?
Right.
We're purists in this country. I mean, last time I went to Mexico, last summer, to Mexico City, everything was electronic.
Yeah.
And people that go to Asia, everywhere, they're like, everything's electronic.
South America,
India,
for
everything's
sure.
electronic.
Yeah.
US, I mean, we're way behind the rest of the world technology-wise.
Little risk averse.
No, it's not a question of risk averse. We don't do things, we don't adapt to change well. We're purists, like baseball.
Okay. All right. Let's not move on to baseball.
Anyway, it's just me and Sol here today. Scott's on another vacation, you know, lollygagging around the world.
Yeah, he's not. But he's on a plane as we speak, so yeah, he's sorry he can't be here. All right. Could a major equity crash position crypto as the only viable value play remaining?
And don't be shy, 989 Lossdog, call in, because we came back here for you guys. Could a major equity crash position crypto as the only viable value play?
Okay, let me finish. With traditional safe havens like gold and silver already sitting at all-time highs, is it possible that the next significant market correction will drive institutional capital into crypto at a scale that establishes its global dominance?
Not a chance in hell. Not a chance in hell. I mean, it's not even remotely possible. The whole world of crypto is way too small and way too, it has its own risks lying out ahead, which is like, you know, quantum-based technology and other things ahead of crypto that it's going to have to deal with. And it's also going to have to deal with with a changing asset holders and participants and too many single points of failure. No, a major equity crash, the way crypto trades, a major equity crash will kill crypto as well. Unfortunately, listen, I'm long crypto. So I don't want a major equity crash and I don't want a crypto crash. But if you had a major equity crash, I think that crypto would go down too. But listen, nobody knows what's happening. The S&Ps today are up 88 handles. That's like, that's a crazy move, almost 1.5%. And all I read over the weekend was stock market looking for this looks to be a turbulent, potentially awful week for the stock market. And I'm thinking to myself, do these guys ever know what triple witching's about?
Yeah.
Because this is triple witching week. So completely no surprises here today. S&P's up 90.
Yeah. The dog pound wants to know what you traded at the airport, because I'm sure you did.
Oh God, yeah. Last night or this morning?
Last night and this morning.
I traded crude oil, which is doing very nicely today because I'm short it. Like I'm one of the only idiots short crude oil here, and it's actually come in really nicely today. Not only is crude oil down about $4 last time I checked, but they are crushing, absolutely annihilating crude oil premium today, and that's mostly what I'm short. So I traded some crude oil. I traded bonds this morning. I sold some stocks. I bought a bunch of stocks on Friday just because I thought we got cheap. Bought some Robinhood, bought some Apple. The only stock we're getting hurt on today that I did trade also from the airport was MU. I was on a 6 o'clock flight from Boston, so it was 5 in the morning, so there wasn't much to trade.
Right.
And I was sitting middle seat economy because this is one of the few times I looked at my inner self and go, I swear next time it's not like this. I can't do this. Guys were on both sides of me. They were big guys, and I could barely get my computer open.
Yeah.
I'm spoiled.
I mean, nobody likes a middle seat. So
I'm spoiled. Yeah. Hey, I was lucky to get the seat because there was there was no flights.
Well, thank you for all the sacrifice to be here. Let's take a call.
Thank you for your service.
Yeah, thank you for your service, sir.
Yeah.
Rick from Florida. Hi, Rick.
Hey, Rick.
What's up, guys? How's it going?
It's great. What's up, man?
First time caller. I just had a question, Tom. So I sell the SPX in the 0 days, and I just had a question because I heard you say before in a podcast that if you sell it frequently, like I do every day, you can purchase the long wings, like 3 weeks out in advance versus putting them on every day.
Yeah.
And I was just wondering, how that works, and with the fluctuation SPX, how often do those long wings have to be readjusted?
They have to be readjusted actually pretty often. Like if you had a day like today where the S&Ps are up 90, you got to recenter those long wings. But the way we did it, okay, so you can obviously do whatever long wings you want, Rick. But the way we researched this over the years was you sell the 0 day, whatever, you choose whatever delta you want to sell. But what you buy is you go out 30 days. This is the way we did all our research. You go out 30 days and you go to right at the expected move. Now I'm not looking at a screen right now, so I can't tell you what the expected move is, but I'm guessing the 30-day expected move is probably let's say it's 120 or something like that, 150. So you go out 120 or 150, whatever it says is the 30-day expected move, and then that's where you buy your wings, at the 30-day expected move above and below. Now you adjust them, but you don't adjust them like you would the front month. So on a day where you move 90 handles like today, you would have to adjust. On a Friday, like last Friday, you'd probably have to adjust too because they were down almost 60. But if it's like anything less than 0.5%, we don't adjust. But over 0.5%, I probably adjust.
Is that your preferred way of strategy for the SPX in the zeros, or do you just prefer to just
No, I prefer to go $20 or $30 wide and stay in the zeros. It's just easier. It just costs less money, and it's just like, I'm in and out. I don't really love this stuff, so I don't hold it that long. So I prefer to stay on 0-0.
Yeah, okay. All right.
Yeah. But we did research it, and the difference, long term, the difference is very minimal. So whichever way you choose, it did not make a big difference in your results.
It's just for the slippage and stuff, right?
Yeah. Yeah.
Would you say that's just it?
Yeah, yeah. I mean, listen, it's just a choice thing. It did not make a big difference. Long-term results, they were almost virtually the same. And we researched this, like, we back-tested this thing, I don't know, I can't even remember how many times, but I think we ran it every single day for like 10 minutes for like 2 years. So every 10 minutes for 2 years, and the results were really similar.
And one last question, if I can, Tom. So I have a kind of a smaller account.
Sure.
It's about 55K, and I was wondering your preferred if you do SPY or would you do the XSP?
Well, if you can get decent fills, you want to do the XSP only because it's cash settled and you don't have to deal with any of the, you don't have to deal with anything else. But you can for sure do SPY. You can almost get away with a 50,000+ account. You could almost get away with SPX doing a one lot. But if you're uncomfortable with that, then just do XSP or SPY. Either one of those. It's not going to make a big difference.
And then if I have an SPY, if I sold a short strangle or short straddle, is it possible that I could get assigned while the position was on, or
No.
do you only get assigned after market close?
No, you can't get assigned intraday.
So just after market close.
And
All
there,
right, awesome.
yeah,
Tom. Thank
and
you
there's
very
no
much.
assignments in XSP anyway or SPX, but just SPY. And you're not. And if you take it off before the close, there's no risk.
Awesome. Appreciate it, guys.
Thanks.
Have a good day.
Thanks for your
Thank you very
call.
much.
Yeah. Thanks.
Have
Thanks,
a great
Rick.
day.
Yeah, don't be shy. 99 Lost
Yeah,
Dog.
thank
All right, next up, I'll be moving to Asia, Japan, Singapore, and I was wondering what would be the best markets to trade overseas. To be honest, I don't want to wake up at 1 o'clock in the morning to trade the U.S. market, says Raphael.
Raphael, come on, man. Get with the program.
You got to wake up, like Tom.
You got to wake up. I mean,
No.
there are no markets to trade. I mean, Japan, Godspeed. Singapore, there basically are no local markets. The Singaporeans trade a lot of futures and futures options because those trade 24/5 in the U.S. So Singaporeans do trade a lot of futures and futures options. We've never had a ton of Japanese customers, so it's hard for me to say. But we've opened 2 companies in Singapore, so we definitely have had, lots of Singaporean and Australian customers, because we've opened 2 companies in Singapore and 2 companies in Australia, and both of those customers is kind of the same hours. And the same thing in India, although it's harder for Indians to trade U.S. markets than it is for Singaporeans or Australians. But you don't have a lot of choices. I mean, you really don't. And I would love to tell you there's some other market, but stick to futures options then. At least you can get some decent markets in ES and crude oil and gold and silver. I'm not silver, but gold, and maybe a few other markets like some of the currencies. But that's your best bet. You need to hope that in the next couple of years, a lot of the tokenized markets start offering derivatives, and that'll help you. But you don't have a choice. You wake up at 1 o'clock in the morning, or you either don't trade or move back to the U.S.
Oh, okay, Raphael, there you go.
There you go, dude.
Sorry. Those are your options,
what's
I
going on
guess.
with your hair today?
What do you mean? What's
My
wrong?
hair's ruined. It looks good.
Oh, thank you.
You got an interview, a date. What do you got going on?
Neither. Special occasion. Nothing. I just felt like it. Okay. No, my daughter had a concert, so
Oh,
long story. Boring story. What is the best trade? This is our friend Neil. He's
Neil.
asking, what's the best trade you ever saw in the OEX pit? But maybe we should do this one with Scott, too. The worst trade and the craziest behavior. Because they like the war stories
the best trade you ever saw in the OEX
in the
pit?
OEX pit.
What's the best trade, the worst trade, and the craziest behavior?
We'll have to repeat it tomorrow so Scott can answer.
Well, I'll tell you, Neil. So I'm going to go back to my really, really early days, like when the OEX pit just first started. And we were on the old floor in the Board of Trade. We were on the 7th floor, and
Oh,
the
wow.
pit had just started. And there were these 2 guys, and they were both thought they were like tough shit. They were the alpha males at the
Who
crowd.
didn't in the OEX?
I know, but this is even before that. This is
Okay.
before all the people that you knew even thought they were any good. This is like going way back. And there were 2
The
guys.
80s?
Oh yeah, this is early 80s. This is like 83, 82.
Oh, wow.
And there were 2 guys, and they stood at the top row of the pit. And in in the floor trading days, if you had to give a number. So in other words, if somebody said, you can't just say sold. You had to say, I'll sell you 10, or I'll sell you 100, or I'll sell you 1,000. But you can't just say sold. So one guy who's a huge trader, at least I didn't even know him, but he was a huge trader. He says to another guy who's a huge trader, sold, and he doesn't put a number on it. The other guy says, buy him. Okay, now both of those you have to put a number on it because otherwise it means like some unlimited thing.
Right.
But they were both so cocky, and the whole pit just stopped, and everything went to like just total
Record
silence.
scratch.
Yeah, you hear record scratch. And the one guy said sold, the other guy said buy him, and then the guy who said sold the first time goes, I said sold. And the other guy says, I said buy him. Okay, so they were in this standoff, and they ultimately decided on a 5,000 or 10,000 lot. I don't remember, but it was a big option.
Seriously, the egos.
The ego. I don't know how they ever resolved it because I don't even remember like what happened next. But that was the craziest trade because, like most of the pit was trading 5 lots, 10 lots, occasionally you see 100 lot, and these guys were trading 5,000 or 10,000 because they didn't care. It was unbelievable. The worst trades I ever saw were on days where it was, the crash of '87 was the worst I've ever seen. Wow. There was nothing I could ever compare to the crash of '87. Things were so out of whack, and it was so scary, and I saw so many people lose everything they had, and it was like grown men crying type thing. Oh. And I was just kind of watching because there wasn't a lot to do because everything was basically shut down, and it was kind of really super weird. I mean, I made money, like Tony made money, but most people got killed. That was the worst I'd ever seen.
Wow.
And the craziest behavior was one day when the Fed changed rates after the close. They had a surprise rate change after the close, and the entire place went up for grabs.
When was this?
It's like 1998 or something.
I was still there.
I'm giving you 3 times: 82, 87, and like 1998 when the Fed just changed. Those were the craziest times in the OEX pit. Also, when the Cubs made it, to the National League Championship, and we had the televisions in the crowd.
What year?
I don't remember.
I don't remember either.
And also when they used to play this game called Bag of Bucks, remember that?
Yeah.
When everybody would write their name on a bill, it was either like a 1, a 5, 10, whatever it was. Yeah, you had to figure out the bills, and then they'd put it in a bag, throw it, and then somebody would pick it, and somebody would win like 10,000, 20,000, 50,000. It's crazy.
Crazy people.
Yeah.
Dog Pound Gino says Tom looks a little bit like the Edge from U2.
Yeah, with the hat.
Yeah, I guess a little bit.
I slept in
like the Edge.
I slept in the airport basically last night. My hair is horrible today, so I haven't taken my hat off.
He's an amazing musician, unlike you. But anyway, moving on.
I'm not a big U2 fan.
Why not?
Very overrated. Very average band, very overrated.
I need Scott here. Okay. Next up, in Canada, we have tax-sheltered accounts like the TFSA and RRSP, but they restrict strategies that involve short selling, so I can't run strangle spreads, etc. What's available are long options, long stock, long crypto, and covered calls. How to grow these accounts as aggressively as possible within those limitations. I personally like using leaps, but the downside risks during market declines can be significant. Are there ways to structure or diversify a portfolio with leaps and other long strategies that help mitigate that risk?
Sure, because there are now some ETFs that have that track the downside as opposed to the upside. But yeah, you are right. In Canada, the tax sheltered accounts, they have legacy regulations and they're kind of archaic. For years, when we owned Thinkorswim Canada, for years we tried to argue with the regulators and have those rules changed. We got nowhere. We didn't even make baby steps. We got shut down at the door. We tried to stick our foot in the door and have all the rules changed, but the big banks in Canada completely shut us down. Canada is a very difficult place for tax sheltered accounts to have anything other than a long delta position on. Like you said, you know, you can buy long options. So you could theoretically buy puts, or you know, you could buy ETFs that are inversely correlated. You know, covered calls and I don't even know if you can sell. I think you can do cash secured puts, but I'm not even sure. But it's been a long time. Canada's hard. For Canada, you basically have to have a controlled long-short portfolio using inverse ETFs if you want to get yourself some short deltas, and you have to and you really have to just limit what you can do in a Canadian, you know, RRSP account or a TFSA. You know, it's just, we fought it, but there's like 5 or 6 big banks in Canada, and it's just, it's not worth the battle. I mean, you know, they literally shut us down, and the second time we tried to go to Canada, they literally shut us out.
Wow.
So it's a very difficult place to, and you know, Canadians, you can trade in the U.S. You know, if you can find a broker that's licensed in the U.S.
Yeah. Okay.
There's not a lot. There's not a lot that are. Yeah.
I like this one, and I needed to add it. Just a big thank you for all the knowledge shared. Thanks to Tom, I now can support my son doing the wheel strategy and selling put spreads. Forever grateful, says our friend Mercedes.
Oh, cool.
She is, I want to say, in Central America.
Very nice. Thank you, Mercedes. We'll take it.
Yeah. Okay, another long one. I'm managing a delta neutral, vega neutral options portfolio. The underlying assets dynamics are governed by a Heston stochastic volatility model combined with Merton style jumps.
What are they trying to do? A lot of big words.
I know. If the market experiences a sudden severe negative jump in the spot price accompanied by an immediate steeping of the volatility skew, how will the interaction of Vanna and Vega exposures, like how will they, Vanna and Volga dynamically alter
Those are second derivative Greeks.
my portfolio's delta and Vega exposures? Furthermore, what is the optimal hedging continuous time strategy using only vanilla European options to minimize the portfolio's variance, given that I cannot perfectly hedge the jump risk? I need a drink of water.
I have no idea. I mean, this is over my head. You know, like this you're going to need somebody that, like this is a perfect question for my old buddy Dr. Jim, who would eat this up, and this would be like his, you know, this would be something he could just sink his teeth into and make about an hour-long discussion on. But if you're managing a delta neutral, vega neutral, you know, options portfolio, you're a retail customer. I'm just going to explain this the simplest way we can, because there's too many. You don't need to talk about second derivative Greeks, and we don't need to go there at all. If you have a delta neutral, vega neutral options portfolio, and you are using standard customer buying power reduction, you don't have to worry about any of this stuff, okay? Because the only thing you have to control is the size of your positions.
Okay.
Because a sudden severe negative jump in the spot price, like let's just say what happened to silver, what happened to crude oil, it's indefensible anyway, other than with rolling up the puts or in those cases or something like that. But the problem with that is, as volatile as markets have been, they've gone up and they've come right back down. I would say that just monitoring your trade size, the optimal hedging continuous time strategy here is not to use futures against the position to try to offset the deltas. It's not to overly adjust maybe 50% of the move, 50% of the delta max adjustment. The optimal strategy here is to keep your trade size in line.
Okay.
You can never, nobody can hedge jump risk. It doesn't exist because you don't know what's going to happen. You know, the only way to defend it is by keeping your size in check.
Okay. Arthur from the Dog Pound says, Tom, you were right on MU shorts last week. New outlook? Now MU is...
MU is like a new high today.
New high.
Mean, I didn't like that. I didn't like any of the shorts. I was in New York at the end of...
Yep.
I was in New York the end of last week. We were doing a press tour for the new Lossdog launch, and I did a bunch of podcasts, and everybody was really kind of bearish, and I was surprised. And I'm like, they're like, aren't you? You're always bearish. And I go, I am, but not
yet.
No, but not going into triple witching weeks. It always scares me to be really
Yeah, that
short
makes
going
sense.
into triple witching weeks. So I kind of got, I was pretty flat. I'm a little short MU this morning, but stock was up like 24 earlier. It's up 18 now. I would just say that, that's a tough stock, and you got to play MU pretty directional. It's pretty hard to sell premium in there. But yeah, I mean, it was a good call.
Okay. Next up, volatility. More about what it is and why it is so useful at predicting. This is our
You know
friend
what?
George.
Yeah, and again, don't be shy out there. 989
Yes.
Lost Dog. I want to hear from you guys. So volatility is useful at predicting because volatility is the only way that we know that we can figure out expected move. So if the volatility on X, let's say the stock is XYZ. If the volatility in XYZ is, let's say, 20, and the expected move higher or lower is $10, $5 higher, let's just say it's $5 higher, $5 lower, at the volatility of 20. Well, the reason volatility is important because if volatility goes to 30, then the expected move is 15. And if volatility goes to 40, then the expected move is 20. So the volatility doubles, the expected move doubles. Volatility goes up by 50%, the expected move goes up by 50%. So what it does is it gives you ranges, it gives you expectations, so it gives you reasonable predictability. That's what volatility is. Like the fact that more people don't use volatility when they talk about like what I don't want to hear people do is to tell me, here's where support is, here's where resistance is, here's why I like this company because they just built, blah, 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 they just cut this deal or launched this product, whatever it is. What I want to hear somebody say is, oh, volatility is up by 50%, so the stock has a 50% more expected move, and now the range is, instead of 50 to 60, and it's trading at 55, now the range is 62.5 to 47.5. So I can set, reasonable mental stops and things like that.
Okay, cool. Remember to like this video and subscribe to our channel, our YouTube channel. And send us your questions to oneluckydog@lostdog.com. And call us, 989-LOST-DOG. All right. This is a question for Tom. Do you trade Forex? How do you approach it, giving a history of being a premium seller?
You're right, Joe. I occasionally trade Forex. I have built 2 Forex platforms, one inside Thinkorswim, one inside Tasty. But I'm definitely not that big of a spot Forex trader. So like right now I have positions on in lots of currency contracts, specifically the yen's one of my larger positions. I also have positions on in the euro. And so I do trade a lot of currency futures and currency and options on currency futures, because that's my preference is to trade, like sell puts and things like that. But I do occasionally trade spot Forex because the leverage is really cool and the platforms are really nice now. I mean, they've gotten so much better. 25 years ago, they were crap, but now they're actually pretty cool. My biggest issue with spot Forex is that it's one dimensional. You buy it, you have to be right, sell it, you have to be right. I mean, there's nothing else to it.
Right.
High leverage, and also, you can pair off different things. So like instead of just buying the yen, you can do the yen against, let's say, against some other currency. You can do yen euro as opposed to yen US dollar, that kind of thing.
Sure.
So I trade Forex, but pretty infrequently, and I don't. Man, let me tell you, I would say the last time I traded a spot Forex contract was probably maybe 2.5 weeks ago, and I bought a little euro, but that was it. And I usually trade futures options on currencies or the futures currencies themselves. I prefer futures over the spot.
Yeah. Okay.
It's not a bad product. It's just too one-dimensional for me. That's why I don't like it. That's why I'm not crazy about it.
Ashley's asking, what do you think of GEX? A hot topic among traders right now.
Yeah, what is GX? I forgot.
I don't know either. Actually.
Yeah, I know what it is. I can't just think
forgot.
it's the gamma. Is it the gamma?
Gamma exposure.
Gamma exposure, right? I couldn't remember because I don't. So I know it's a hot topic, Ashley. I couldn't even remember what it stood for. Gamma exposure, right? That tells you what I think of it. Is I couldn't even remember what the acronym stood for. So a lot of people. First of all, it can't hurt you at all. It can't hurt. Again, I'm one of these people that think that it can't hurt you. So if you like it and it helps you, it's just like any one of those other indexes that you can't trade. It's just like an indicator. I think it's kind of cool, and so. Let's see, here's the actual definition. It measures the dollar value of a hedging activity market makers must undertake for every 1% change in the underlying stock price, calculated from the option open interest. It indicates whether dealers are net long or short options. I don't know that I totally believe that, but it would have been kind of cool to see like with stocks like GameStop and things like that.
Right.
Like, where these indexes went and stuff like that, or I guess it would be pretty cool in like if the market had a crash or something like that. But I think that in general, man, I mean, do any retail customers pay a lot of attention to gamma? I mean, I for sure don't, and I'm a retail customer because my positions are small enough because of the amount of capital it takes to trade as a retail customer. It is very hard to put yourself into a rough gamma spot. I mean, outside of like silver or crude oil this year, I can't even think about what was a crazy gamma situation. But you know what, Ashley? I don't want to be negative on this because if it's a hot topic among traders and they like it and it helps you in any way, sure. I'm definitely not negative. If it creates some engagement,
just don't use it.
I just don't use it.
Okay, there you go.
Yeah.
All right, Dean says, I would like them to discuss the business and life as a trader, especially the process of trading as a business.
Well, okay, that's a very fair question. So first of all, I don't trade as a business anymore. I did for half my life, literally half my life. Then the second half of my life, I traded.
What, you're
as
at the end of your life?
No.
One half and the second half?
Well, of the last 40 some odd years, the first 20, I was a trader and my trading was my business.
Right.
The last 20 something years, I've been trading the same amount, but trading has been like a complementary part of,
right.
And I've been building businesses. So they've been very different. Trading as a business, it's hard for me to explain life as a trader in what you're experiencing because my life as a trader was as a professional market maker.
Right, it's
so
very different.
It's very
now.
different. I've never been a professional, I've never created a business to support myself solely on trading after I left the floor because we were building other things. And it wasn't a question of not wanting to, it's just that we just got so deep, knee deep into other things that it was just
building the business.
Yeah, to building the business that it just, like I said, we didn't slow down at all. Like I still trade as much today as I did 20 years ago or 25 years ago, but I figured out how to do it as part of everything else that we do. So when I was a floor trader and a market maker, I mean, it was, if you can survive, it was the greatest business I think in the world. I mean, it was fun. It was locker roomish. It was kind of stupid. You know, listen, it was amazing. It taught me everything about life and business and everything.
But there's nothing like it anymore.
There's nothing like it anymore. So trading at home is a little, trading by yourself.
Huge place where you were among traders and
Yeah.
everybody was trading for 8 hours a day.
Now it's kind of like, it's It's a lot of solitude. It's a lot of,
Yeah.
it's much
It's
different.
just you and your phone or your
I
computer.
am pretty sure that I could do it and I would probably like it, but I've never just done that.
Well, now you're building a business. So
Yeah. But listen,
Yet another one.
I think a lot of people, it's a really good foundation for whatever else you want to do with your life. And it might just be that's what you want to do. I know plenty of people that's all they do. And I know lots of other people that use it as a foundation for everything else that they want to do. So I don't want to discourage, again, you at all, because for me, it's been the greatest thing that ever happened to me, was finding out that there's such a thing as traders.
So if you're doing it, if you will, on the side, how many hours would you say somebody has to put into it?
Well, I put in at least a couple hours a day still.
No, you don't, because you do it overnight and everything.
I still do it during the day. Yeah, a couple hours a day. I mean,
Just a couple hours a day, really?
yeah, a couple
Okay.
hours a day. For me now, that's a lot of time.
I don't believe you. I think it's more, but okay.
I'm
All
a
right.
multitasker. You don't see all the multitasking.
Sure.
All the
sure.
multitasking that I'm doing.
Okay. I would like to know what Tom and Scott think about college and how much debt should a student be willing to take on for a better school versus a cheap as cheap as possible undergraduate education, but then having more of a struggle to get your foot in the door somewhere because you lack that name recognition or networking that the premium school might have. I have multiple high schoolers and could use some more options. They really don't
Opinions.
know what they want to major in yet.
Doesn't matter
And
what
we're
they
going to be
want.
talking about this we're going to do an Unleashed on this.
It doesn't matter. It doesn't matter what they want to major in yet. There's no question to me. There's no question about this for me. Like, this is not even debatable. You want your kids to go to the best schools possible because you want your kids to be exposed to the best teachers, the best students, the highest caliber students, because the friendships that they build and the groups that they hang out with are going to define, who they are and what they become. And getting as cheap as possible makes no sense to me whatsoever. Undergraduate education is probably the most critical thing in life. I mean, that's where it all starts. That's where you mature. That's where you network. That's where you build confidence. That's where you make friends. There's a lot of people out there that would argue that just get an education. It doesn't matter how, it's just as cheap. The cheaper,
I mean,
the
if
better.
you don't have the means, sure.
I understand, but this person's not saying that they.
No, I get it.
They're saying
I get it.
how much debt, and for me, don't worry about the debt. I know that sounds crazy, and it sounds like oh man, some rich guy telling you don't worry about the debt, but I really think you got to go to the best school that you can afford. Okay, I mean, like, in other
There you
words,
go.
you take as much debt as you can to go to the best possible school, but you don't put yourself in a position where it's going to choke you. But there's a lot of times there's a lot of choices. Like, you might get into, if you're a smart kid, you might get into a great state school. Like here,
Right.
if you're in Illinois, you might get into a great school like Illinois, and you might also get into a great expensive school like Northwestern, just as
Right.
an example.
Right.
And maybe in that case you choose Illinois because it's a third of the cost. And that's very fair. I mean, you choose an out-of-state school because it's still less than a private school if that's the case. But you go for the best possible school because those are going to have, smart kids. You're going to surround yourself. Your friend groups are going to be different. The teachers are going to be better. Everybody wants to teach at all the good teachers want to teach at the best schools. All the smart kids want to go to the best schools, and this is who you want to surround yourself with.
Yeah.
I mean, and you don't want to regret that later on. Oh man, I wasted 4 years, partying and this and that. And forget that. You're going to regret it later on. No, you want to go to the best possible schools, and you spend whatever it takes, because you don't know. Like, it may be cheap. Borrowing $50,000 a year right now sounds like it might be like ridiculous, but it might be cheap.
Yeah.
If it means the difference of, $50,000 to $100,000 a year in salary.
That's right. Yeah. Okay, next up. What do you think is more important in life? to be right as much as possible? Oh man, these questions, I wish Scott was here.
No, Scott can't handle these questions.
What do you think is more important in life, to be right as much as possible or to admit when you are wrong? I guess it also relates to the question of hubris, says Townsend.
Townsend, these are kind of heavy for me. I'm like,
I mean,
so.
Go on.
Well, all right. I don't want to make this I don't want to make this into a political thing, but we need to judge people on their ability to accept being wrong and their ability to admit when they are wrong. The lowest form of life, in my opinion, the absolute lowest form of life, Earth's true scumbags are the people that can't admit they were wrong, can't admit they lost, and don't know how to handle defeat. You can take anybody you want and put it into
that category.
and maybe they fit perfectly there, but that shows that's low self-esteem, that's narcissism, and that's a lot of the problems we have in the world today because there are people that think that way.
I don't want to be rough, but sometimes it's stupidity too.
So most of these people are incredibly stupid. So if you're not able to admit when you're wrong, you're usually
have to be able to admit
you're
that you're
usually
wrong.
incredibly stupid. But that goes without saying.
Yeah.
Sorry, I wasn't trying to make anything.
No, I got it. Loud and clear. There you go. So it really isn't important in life to be right.
Not at all.
No, because you
Now-
have to learn from your mistakes. And if
Yeah.
you don't make mistakes,
Yeah, but I'm the only person you've ever met that's never been wrong, right?
Sure. Okay. Oof, let's go back to DTE. I love trading options, 45 days to expiration, weeklies, futures, options. I'm a numbers guy. Oh, I remember this guy. I like this email. I couldn't disagree with those books, but I'm obsessed with selling options that I want to quit my job and trade full time. I see YouTube gurus doing that. I think I'll be 1,000% happy doing that for a living. Is it possible to live off of options? I want to pay my bills, provide for my family, which I can with my current job, but I want to go full time on options trading, selling options. I'm torn. I don't want to let my family down. And also, for context, because obviously I couldn't fit the entire question or email in this, he had an uncle or somebody in his family who had tried to do this and failed miserably.
Okay.
And then he also consulted with his parents, and they're very much like, no, you had to stay safe in your job. So what do you think you would tell him?
I would tell you that you do whatever you want to do, and I wouldn't listen to your parents, and I wouldn't care what your uncle did or anybody else. This is all about you, and you have to make that decision. Like you just said here, I think I'll be 1,000% happy doing that for a living. Go for it, man.
Yeah.
I don't regret for 1 second any decision we ever made, including the losers. So absolutely go for it. I mean,
And he says he's a numbers guy. He likes what he's doing.
Go
It
for it.
sounds like he's got
Go for it.
solid plan.
just go for it. Don't overthink this, okay? You know what you want. You're just looking for us to say, yeah, sure, go for it. Go for it.
Okay. There you go.
Yeah. Let's do a little market talk.
Oh my God, it's that time already. It went by fast.
Yeah.
Okay, market talk.
S&P's up 74. It's a big day for the bulls. Nasdaq's up almost 300. Gold's down 60. Silver's down, 50 cents. I don't know what crude oil's doing. I don't have my screen right in front of me, but it's down about $4.
Ooh, look at you. We got our new feed.
There you go. Let me see right now. Crude oil down. I can't tell. Is that 3 something or 5?
It's very small.
Yeah, it's small. I can't tell yet, but we'll get
But
something.
you guys can tell.
Bonds up 22. That's good for the good kids. Apple up. AMD. Every stock's up. I have no stocks on my board that are down except for Volatility, which is getting crushed today, which is good for the good kids. So maybe this is a good sign for the market. Every stock on our board is super strong, and it's triple witching week. I'm always nervous about getting short into triple witching week. So I play it very flat this week delta-wise. But if you thought you missed them last week, you didn't miss them. Now you can sell them at much better prices, better than anything you could have got on Friday. Anyway, thanks so much. Sorry I was late today, and have a great day, and we'll see you tomorrow.
Yes, we'll see you tomorrow. Bye.